I can make anyone a profitable stock trader. I'm going to show you how right now. My name is Ross Givens. I'm a 20-year veteran of the markets. I was a former vice president of investment management with JP Chase. And I've coached tens of thousands of traders and investors over the last 7 years. Right now, I'm going to distill 2 decades worth of market knowledge into you in about 20 minutes. I'm going to show you what to look for, what stocks to focus on, and precisely where to buy and sell for maximum gains and minimal loss. I'll show you how to keep risk small while still being in for the big, powerful moves. Best of all, you don't need any financial experience to do this. You don't need a degree in finance, securities licenses, or 10,000 hours behind the screen. I'm going to show it all to you right now over the next 20 minutes. Let's dive in. This is a chart of NuScale Power, ticker symbol SMR. I bought this stock 90 days ago, here on May 12th, at around $18 a share. It's up 150% and counting. I tell you that not to brag, but to let you know that you can do the same thing. Buy these precise moments before explosive moves higher by using a methodical process. And the first thing you need to understand is this: you are not in control. The stock market is an auction like any other. It abides by the law of supply and demand. If there's more demand than supply, i.e. more people buying than selling, it is going to go up, period. And if there's more selling than buying, it's going to go down. So it stands to reason that those with the deepest pockets, the ones doing the great majority of buying and selling, are the ones that are driving stock price movement. I'm, of course, talking about Wall Street funds, the smart money, institutional dollars. Everything from ETFs to mutual funds, hedge funds, endowment funds, pension funds, and everything in between. Pretty much everyone with 3 commas in their account balance. So if you accept this, then you must also accept that your job is to be on the same side of the trade they are, to be buying the same stocks at the same time. So your job as a trader or investor is not to guess, it is not to speculate. Your job is simply to interpret. And that's what I'm going to show you how to do here now. Now, the other thing you need to understand is how these big funds invest. If whatever they're piling money into is going to be driven higher, you want to know what that is as quickly as possible. And the way they invest is thematically. If you're managing a $50 billion investment fund, you're not going to bet it all on one stock like SMR. Even if you wanted to, this whole company's only worth $12 billion, so you couldn't put it all in. Instead, they invest in a basket of securities. Let's say they're very bullish on nuclear energy. They think that it's going to be the solution to solve the power crisis for AI. They think the government's going to open up regulation. There's new technology making it cheaper, whatever it may be. They're bullish on nuclear. They think that's the place to put money over the next 1, 2, 3 years. So what they're going to do is go out and buy pretty much all the big nuclear stocks. They're going to buy SMR, OKLO. They're going to buy GE Vernova. They're going to buy the companies that make the software they run on. They're going to buy everything attached to it. And so when they do that, when they're all piling into a certain corner sector of the stock market, that area of the market is going to rise faster than the others. Because if there's $500 billion buying these stocks and $50 billion buying these stocks, these are the ones that are going to go up, right? Pretty straightforward. And so the first step is to see, where should I be fishing from? Not let me try to find the needle in the haystack, figure out where it's raining, and put your bucket there. So here's how you do that. Now, this is a little bit over the top. Don't let it scare you. All I've done is put in about 40 different sector ETFs. One of these covers nuclear stocks. One of them is solar. One of them restaurant stocks. One of them is blockchain, one of them is semiconductors, everything in between. And so all we're trying to do is see, hey, what's going up the most? So if we look at this over a year, here's the top performer very clearly. It's BLOK. That's Block, the ETF for crypto and digital assets. So the cryptocurrency corner, digital payments. Second is very clearly here, NLR. That's the nuclear stock ETF. Third is ITA. That's aerospace and defense. We're going to do the same thing over the last 6 months. Once again, top performer is this, NLR, the nuclear sector. Second is aerospace and defense. Third, XME, which is metals and mining. You're going to do the same thing over 3 months. Once again, nuclear is the top performer. Crypto, digital payments is in second place. Mining and metals is in third place. So you do this for a year, 6 months, 3 months, 1 month. Just jot down the top 3 or 5, and you're very quickly going to see which areas are leading the market. Now, I've actually coded this up here on TradingView. It's very simple. It just looks at about 40 different ETFs, shows me which one is up the most over the last 1 month, 3 months, 6 months, etc. And all I'm doing is trying to find names that show up over and over. Here's nuclear. Best performing area over 2 months. Best performing over 3 months. Best performing over 6 months. And one of the top 8 over the last 1 month. That's an area you want to focus on, right? So that's how you're going to find the areas to focus on. And once you do that, once you know you want to be looking at nuclear stocks and you want to be looking at crypto and you want to be looking at mining stocks or semiconductors, whatever those top 3 or 4 areas are, now you can take a world of 7,000 stocks and drill it down to just 40 or 50. So this is early August 2025. Here's my current list. It's the big crypto names: Coinbase, Robinhood, MicroStrategy, Galaxy. The big nuclear stocks: OKLO, Centrus Energy, NewScale, BWX, Denison Mines, Nano Nuclear. You can find any of this stuff with a quick Google search. Just Google top nuclear stocks, or Google the nuclear ETF and click on what stocks they hold. Very, very simple. Quantum computing was also very hot, and it was showing up in all of my lists a couple of months ago. I actually bought QBTS right here, and it went up 140% in 2 weeks. Mining and metals, top 8, 10 stocks there. Top AI stocks: NVIDIA, Broadcom, Meta, etc. And so that's your hunting list. That's what you're going to focus on. Take the other 6,950 stocks and throw them in the trash. You want to laser focus on these 50. You have a good bull market. You've identified the top 3, 4, 5 areas where the big Wall Street funds are getting in, where the money is flowing to and the wind is at your back. And then you're simply whittling that down to the top 5 or 10 stocks in each of those groups. And this simple task is going to drastically improve your results. Now, once you have this shopping list of stocks, you want to run through each of the charts, and you're looking for a pattern that appears like this. Now, this is a shallowing base breakout pattern, at least that's what I call it. But what's happening is the laws of supply and demand are working to your benefit. Remember, when these big firms, these big institutional multi-billion-dollar monsters are buying stocks, they spend weeks, usually months, building up a position. Because if you're trying to buy 100 million shares of stock, you can't just go buy it at the market like we can. There's not that much out there for sale. So they buy it day after day, week after week, month after month, trying to build up that position. And this is where we're going to pounce and take a scalpel to this chart to buy at these precise moments where the stock is likely to make a big and fast move higher. So let's walk through this and I'll show you what's happening. Now, first of all, you want to look for stocks that are going up. And I know that sounds simple, but you need some kind of sign that the big money is flowing in. Look at this chart starting at the left. Between March 10th and March 17th in a single week, this stock, QBTS, D-Wave Quantum, went up 166% in a week. Now, this is clearly a big, powerful move. Clearly, big buying is stepping in to drive a stock up that much that quickly. So we know we're locked into the right stock, but we don't just want to chase it. Don't just buy it because it's coming up. Let's walk through what you want to look for. Now, anytime a stock doubles in a week or goes up even 40, 50% in a few weeks, that move needs to be digested. If you buy a stock and you double your money in a week, you're probably going to sell it. You're at least going to sell some. If you're not selling some, you're going to start selling as soon as it wiggles down a little. So all that pent up selling, all those people who have big, big profits and either want to take them now or going to take them as soon as it shows weakness, that's an abundance of supply. Start thinking about stocks in terms of supply and demand. Clearly, there's a massive amount of demand over here. Everyone bought it. Now there's this big glut of supply, and that needs to be digested. So what's going to happen is eventually this stock is going to pull back like took place here. It could be profit taking. It could be people coming to their senses. It could be any number of things, but that big move cannot last unless it's some massive piece of news like a company that cured cancer or solved the solid state battery issue and it's going to generate billions. So you want to wait for that to pull back. Now, if this stock is in fact still in demand, if these big Wall Street funds are still buying it week after week, month after month, building their position, they will take advantage of this dip and buy it and drive it back up. Now, the stock has come from 11 down to 6. It pushes back up here to about 8 or 9 bucks. There's going to be a little bit more selling. And this could be the funds sending big sell orders. It could be manipulating the news cycle. There's all kinds of little tricks they pull to keep the price as low as possible while they're buying. Again, as the stock pulls back here to around 5 or 6 bucks, they buy up again. And it creates this series of shallowing retracements. Each one of these dips, these retracements, these pullbacks become shallower and shallower. The first one was big, about 50%. The next one was much less, at about 25%. The third one was down to about 20%. And then the last pullback here was just about 11%. And so the fact that these pullbacks, these dips are getting shallower and shallower and shallower shows you the stock is becoming harder and harder to buy. And what's happening is you are working through that supply. The sellers are getting out of the way. You're shaking out the supply. The stock is being transferred from the weak hands, that's you and me and anyone that trades with a stop loss, to the strong hands, which are the big institutions that are building massive positions they plan to hold for months and years into the future. And so as this is taking place, you'll notice, and I've drawn this horizontal line, that a level of resistance will form, a price that the stock cannot seem to get above. In this case, it's about $8 a share. It's right here, stalls right here, stalls right here. So the market is telling you where the supply is. They're telling you where the sellers are stepping in. And as long as there's a bunch of people who want to get out of the stock at $7.5, $8 a share, it is never going to go higher. You must work through that supply. The sellers must be absorbed. But once they are, once all the people trying to get out at $6 and $7 and $8 a share are gone, once the institutions have bought as much stock as they can in the $6, $7, $8 range, they've shaken people out, they've manipulated news stories, they've done everything, they've gone on CNBC talking about how they're worried about the quantum sector. Once all that's taken place, then the stock is free to go higher. And so what you are looking for and what you are waiting for patiently is for the stock to then break out above that level of resistance, which takes place right here. And that's where you buy. In fact, that's exactly where I bought this stock back here in May at $8 a share. And look, it quickly, and I'll take this at a log scale so you can see the move. This stock quickly accelerated higher. In fact, it went up 144% in 3 weeks by focusing on the strongest areas of the market, whittling those down to the top 5, 8, 10 names, and then looking for this pattern that shows when you have this big advantage, buying it explodes higher is going to give you an enormous edge. And I'll show you some more examples. This is SMR, the trade I showed you earlier. It is a nuclear stock, which, as we just saw, is one of the leading areas, has been for the last 5 or 6 months. The market pulled back bigly, as Trump would say, during the tariff war. All these big growth stocks got decimated. But just like after it's gone up, after it's made a big move down, you're looking for those sellers to get absorbed. People who bought at 30 and 25 and 20, the stock's down at 15 and 14 and 13, they're panic selling. The stock cannot go up until all those sellers are out of the way. As long as supply exceeds demand, there's more sellers than buyers, it's going to keep going down. That's always going to be true. And so until those sellers are out of the way, the stock cannot move higher. So again, after this big decline, in this case, the stock fell about 57% over a couple of months, we again see this same familiar pattern as it shallows and tightens up and compresses. And then as soon as it breaks out, I bought it here at like $18.50. The stock is now free to advance and run higher, and boy, does it. In this case, 145% in 35 days, and it's actually up a little bit more as of now. Now, there's one other benefit about this I need to show you, because one of the biggest secrets you'll learn, and when you talk to any of the old pros, they'll tell you, manage risk, manage risk, manage risk. And it's so boring when you're starting out. You're like, yeah, small losses, I get it. I'm trying to make money here. That doesn't help me. But this should help you. All right, so once you understand this, the other benefit of this is that you're going to keep your losses very small, and here's why. Let's just use this SMR trade as an example. Notice the shallowing here as it pulls back, in this case, 43%, then 21%, then about 12%. The last one here is about 10%. Once it does that and it breaks out higher, we don't need to risk a lot of money, because what you'll notice about this pattern, and why I call it a shallowing pattern, is that Each of these lows is higher than the last one. The low it made down here is about 11 bucks a share. I'll just put a little red line down here. It ran back up, pulled back. The next low was higher. Pushes back into resistance. The next low is higher. Pushes up, pulls back. Next low is higher. And so as this structure takes place, as the stock shallows and shallows, we know that it should not violate the last swing low. In this case, I'll take some of this off the chart. That's going to be here, this red line. We know the stock should not go below. If we are early and it's not ready to go, and we buy early and it should get shallower and shallower here, right? It shouldn't come down this way. So our stop loss, which is a sell stop order, you place an order that says, hey, if it gets down to this price, sell it immediately. Don't call me, don't ask questions, don't pass go, don't collect $200. Get me out of this stock if it goes here because I was wrong. And so the distance between where you buy and where you sell when you're wrong, where your stop loss is, that's your risk. That's how much money you're risking on the trade. And in this case, if you bought it here, your stop loss was here, you're risking 11.6%. That's actually on the high side. A lot of these you can get away with 7, 8, maybe 10%. But so think about what you're doing here. You're opening yourself up to these huge gains. You're getting into stocks that are running 50 and 80 and 100 and 150% very quickly, and you're doing so risking 8, 10, in this case, maybe 12%. And when you can keep your losses small, and I consider small anything below, probably 12 to 15%. I try to keep it under 10. But if you can keep your losses to 8, 10, 12%, and your gains are 40 and 50 and 100 and 150, you're going to do extremely well. You also don't need to be right all the time. I have held thousands of training webinars with people from 20-year-olds with $1,000 to their name to 70-year-olds trying to manage $5 million. And every single time people ask, what's your win rate? How often are you right versus wrong? And it's not that I have a problem with that question. It's just that it's the wrong question. Because the win rate is only half the equation. If you're risking $1 to make $1, then yes, you need to be right more than you're wrong. You need more wins than losses. But if you're risking $1 to make $5, you're risking $1 to make $8 or $10, then even if you're right a third of the time, a quarter of the time, you are still going to be profitable. And in a good bull market, when you get good at this, you're in the right stocks and the right groups at the right time, and you are right 50, 60, 70% of the time, and you're making 4, 5, 6, 10 times what you risk, you are going to see massive growth. You're going to allow yourself to compound your money at a speed you could not have previously conceived of. Now, there's all sorts of additional intricacies, right? We can look at pullback buys, retests of the breakout areas, moving average pullbacks. Yes, there's turnarounds in stocks that aren't in leading groups and all kinds of other stuff, but this is the broad strokes. If you will master this, I guarantee you will see better returns and you'll see some of the biggest gains you ever have in your life. This is the process. This is the formula for truly making big gains quickly in the stock market. And it doesn't rely on luck. It's not using a bunch of ridiculous indicators with flashing green and orange dots or some magical crossing lines. It is founded in basic logic and the law of supply and demand. It follows the path of what actually moves stocks. It identifies these areas where big institutions are buying up large amounts of stock and allows you to get in at precisely the moment supply is dried up and the stock has a very good chance of making a swift and significant move higher. Try this. I'll be shocked if you don't see better results.